Alright, so in this video, I'm going to share 3 ETFs you should consider adding to your portfolio, or I am adding to my portfolio if not already, and why it is very, very important. Now, before making a purchase of any ETF, you need to make your personal research. It is very, very key. Nobody should convince you that these ETFs are the ultimate game changer. No. In my next video, I will discuss on the key things you need to check before purchasing any ETFs. It must meet some certain criteria. Now, with that being said, ETF, which is exchange traded fund, is a basket of different investments like stocks or bonds bundled together into a single package that you can buy or sell on the stock market. It's like paying for the full subscription instead of subscribing for a single channel network. The good thing about ETFs is that when a stock is performing badly, other stocks that belong to that ETF can help cover up for the losses. That's one key advantage of ETF over stock. You can purchase an ETF through a brokerage account like Robinhood, Webull, and many others. Just create an account with them, deposit money, and buy the ETF of your choice, just like how you purchase a normal stock. My number one ETF pick is the VT or Vanguard Total Stock ETF. This is my top pick for beginners. It gives you a piece of stock from the entire world: USO, Europe, Asia, Africa. Africa is somewhat less concentrated because they are frontier markets, meaning that they are still in their early stage of economy, not much dominant, because their economy is still kind of like fluctuating. And why I like it is that it gives you ownership in over 9,000 stocks around the entire world. Now, in this AI-driven US market, VT ETF protects you by spreading risks globally across other world economies. Now, in the last 10 years, VT ETF has consistently delivered around 9 to 10% average annual returns. It's not that much, but it's very consistent. I'm still very young and have more years ahead of me. So if I can be reinvesting my dividends and leave it there invested for like 30 years, it will amount to something reasonable over time. So if you want the type of ETF that you can invest and go to sleep with full assurance, is the VT ETF. Another great thing is its expense ratio, which is just only about 0.07%, extremely cheap. Now, that means if you invested like $10,000 in VT ETF, Vanguard keeps exactly about $7 per year to cover the operational cost. Now, there are some ETFs that charge over 0.5% to around 1%, which when compounded can eat up your gains in the long run. VT ETF is perfect for beginner investors as it provides diversification across countries and reduces the chance of one market like the US dragging your entire portfolio down during a correction or recession. VT ETF is just a perfect ETF. The second ETF I'm considering is the VU, or the Vanguard S&P 500 ETF. This is entirely a US ETF. US is the biggest market in the world, and each time you hear the market is doing pretty well, just know that this ETF is performing very well. The VU ETF tracks the 500 biggest and most profitable companies in America, and over the past 10 years, it has returned about 12.5 to about 13.5% each year on average. Very strong long-term growth, way higher than the VT ETF. When it comes to its expense ratio, it operates on just a baseline of 0.03% annually. That means for $10,000 invested, you'll be charged with just $30 annually, which is way beginner friendly, and it does not eat up your profits. Another good thing is that even with current high prices in the stock market, these companies that make up this ETF have real innovation, strong cash flow, and global reach. The US economy is still one of the most dynamic in the world and is not stopping anytime soon. And finally, my last pick is the VISOS, or the Vanguard International ETF, which excludes the US market. It's the opposite of the VU ETF. It invests in every other stock except the US market. And you know, the US market is the leading or the biggest globally. So exempting the US market, you should expect that this ETF is kind of slow, but it's consistent in terms of its return. All the ETFs I've mentioned in this video are not a quick get rich, but when you aim for the long run, it can amount to something reasonable. So this particular ETF balances everything. It gives exposure to thousands of companies outside the US. Over the past 10 years, it's around 5 to 6% average annual return, which is a little bit slow, but it's safe by the way. But I'm going to reveal one final ETF that you should consider if you don't want to invest on this. So the VISOS ETF still operates on the 0.07 expense ratio as the VT ETF. And if you can add these 3 ETFs to your portfolio, even when the US market becomes expensive or faces problem, other regions often do better. So what I will recommend for beginner investors is that 40% into the VT ETF, which handles core global holdings, including the US market and international markets. Then 45% into the VU, which concentrates mainly on the US market. And 15% into the VISOS ETF, which is basically international market aside the US market. Now, if you don't want to invest in the VISOS market because of its low growth yield, I will recommend investing in the SMH ETFs, or should I call it the AI ETF. So if AI wins the race, bro, you're on point, because the SMH has delivered an exceptional 5-year annual return of about 375% to 388%, translating to a massive cumulative gain and heavily outperforming the S&P 500 or any other ETF. So the SMH ETF is kind of like a short run and is heavily dependent on the AI market. So if you want to invest in this market, I recommend investing about 50% of your money, then other percent can go to the consistent and stable ETF. So that's all I have for in this video. Comment what topic you think I should talk next and what ETF are you considering to purchase.